Welcome back. Well, the equity markets are doing very, very well. Let's figure out what's happening in the commodity universe now that the tariff threat has been, put to rest, at least for now. We have Manisha in the studios. Manisha, what do you have your eye on?
Well, I'm looking at gold prices, Surbi, because we've seen all-time highs coming into this one yet again. Yesterday, we saw an all-time high of $2,830 an ounce. We're trading at $2,820 at this point in time, but still very, very close to those all-time highs. Well, if you look at the prices itself, we've seen prices gain up by 28% in the previous year and 7.5% already in 2025. You mentioned about tariffs, and that really seems to be an issue right now. And even with that easing a bit, even as the U.S. has put a 30-day pause on tariffs against Mexico and Canada, we haven't seen the gold prices come off too sharply. That is because the U.S. trade policy is still uncertain. U.S. is yet to discuss trade policy with China. So there's a lot of uncertainty, unpredictability into the markets. This is what the gold prices really seem to be making use of. The other thing really is about the U.S. dollar index, where we saw almost 110 yesterday. That coming off also has been supportive. You also have markets expecting that U.S. will deliver 2 rate cuts in this year itself. Apart from that, we also have rate cuts already coming from Bank of Canada, from Switzerland, from European Central Bank, and that has been supportive for gold. The markets do anticipate that Bank of China and India, as they meet in this week, also could go ahead and cut rates, and that is where markets are taking support from. Inflation, slowing economic growth are some of the other factors which are in favor of gold right now. The other thing clearly has been about U.S. buying. U.S. has been buying a lot of metals, precious metals and base metals in last 1 month as this tariff conversation started to begin. So the numbers that we have latest from COMEX tells you that a lot of this metal has been converted from futures to physical. JP Morgan very interestingly says that $3,000 an ounce is a possibility in 2025. I mean, that is something that you have had Credit Suisse and Goldman Sachs continue to reiterate as well. So the U.S. has been importing a lot of gold ahead of these tariffs. And JP Morgan, which is the largest bullion dealer in the world, is anticipated to give a delivery of around $4 billion worth of gold as the February contract expires. So there's going to be a lot of movement, a lot of volatility that you can anticipate going forward in case of gold here.
All right. Manisha, thank you very much for that. So, yeah, I mean, gold is shining and shining brightly, has been for a while. Manisha, thank you very much for that.